welcome back to my channel. I'm Keon of Key Investments, and on my channel I discuss various topics including personal finance, dividend investing, savings, and just general financial literacy. So if that sounds like something you'd be interested in, go ahead and hit the subscribe button below and let's get started. Alright, so today's subject is going to be why you should invest in the stock market. But before we jump into that, I want to go over first, what is a stock? For any new investors or anyone that may be new to my channel, I just want to start with the basics and just go over what a stock is. So let's get started. What is a stock? A stock is an investment into a percentage of the company. When you make an investment into a percentage of the company, you will receive what is called a share of the company. A share is equal to a percentage of the company or a fraction of the corporation. So when you hear someone refer to owning a stock, that means that they own a percentage of whichever said company. So that could be Amazon, AT&T, Disney, you name it. So just to recap, a share is an investment into a percentage of the company or a fraction of the corporation that you own as a result of your investment. Okay, so now that we've discussed what a stock is, let's talk about why you should invest in stocks. One reason being to secure a financial future or to secure your retirement. A lot of people that I know are entrepreneurs, and so there really isn't a 401k available, so you have to take it upon yourself to make sure that you will be secure financially in the future. There is a 7% on average yearly return on investments in the stock market. So with that being said, you have more potential to grow your money in the stock market than you do in your bank account or in physical cash. In fact, if you do have money in physical cash or in your bank account, it's likely that it is losing value due to inflation. Whereas if you invested in the stock market, the money that you invested actually increases in value as it's in the stock market due to the 7% return rate annually. There's a low cost of entry into the stock market, especially now that there are so many free platforms where you can invest in the stock market and trade for free, commission free. So there's really no excuse to not want to get involved in the stock market if it is due to your cash flow. Investing in the stock market is very, very, very low cost to entry. A lot of people that I talk to about stocks and they're not involved in the stock market, they're like, I don't know anything about stocks. I don't want to deal with it. I'm not sure how to do any of that. It's 2020. There's not an excuse any longer. You have all the access to the information that you need on the stock market or on anything for that matter. And stocks are not that difficult to comprehend. So don't let that discourage you from starting into the stock market or investing into the stock market. So when you actually have a plan, have a goal that you want to invest in the stock, stick with it. If there's something you don't understand, just Google it. And also, with that being said, another reason that you can invest in the stock market is because it teaches me discipline. When you're investing, it makes you think about where you're spending your money and how you're spending your money and how often you're spending your money. So that creates discipline. And also, if your money is tied into an investment, you're less likely to spend it. I don't know about you, but when I had put money in my savings previously, I would be quick to just transfer money back into my checking and spend it. But when it's in an investment, you are more likely to think 2 or 3 times before removing it from that investment. Building wealth is more behavioral than mathematical. So once you get in a pattern, you start disciplining yourself and setting aside money constantly, before you know it, you'll kind of get a good amount of money saved up, and then you'll start getting more confident in your decisions, and then you'll save more money and you'll invest more money. And that's one more incentive as to why you would invest in the stock market. And one final reason why you should invest in the stock market is because of the dividend options and growth returns on your money. Dividends are money that you receive from owning a share. So when you receive money from owning a share quarterly or monthly or whatever that particular stock offers, you're actually generating passive income, which is the main reason why you should want to invest in the stock market. Or that's my reason. Maybe that's why I'm so passionate about it. But if you invest in a dividend stock, you are generating passive income. So that means that if you do not touch that stock or do any work with that stock, you are making money off of that stock regardless. So you are generating money consistently based on one investment that you made prior. So with that being said, dividend investing is one incentive to invest in the stock market. Not only that, but you will also want to consider if you invest in a company that still has potential to grow in the future, then you are going to make a profit off of the growth of that company. So let's say I invest in a Netflix share for $250. And then in the future, as Netflix grows and builds its consumer base, then it's worth $350. Then if I purchase the stock at $250 and I sell the stock for $350, what is that? $100 profit? That's how you're gonna make money off the stock market. These are the incentives of investing in the stock market. And if you have any other reasons why you invest in the stock market, go ahead and drop that in the comments. And before you go, make sure you like this video and subscribe. I'll catch you guys next time. Thanks for tuning in.